Good morning, you're listening to The Breakfast Grill. I'm Shazana Mokhtar. Malaysian pharmaceutical player Pharmaniaga successfully exited PN17 status in March of this year and has hit the ground running in implementing its latest strategic blueprint known as Vision 130, which has the lofty target of making Pharmaniaga the most valuable pharmaceutical company in Malaysia, as well as reaching a profit after tax target of 300 million ringgit. Joining me on the show today to discuss the pathway to these aims is Dato' Zulkifli Jaafar, Managing Director of Pharmaniaga. Zul, good morning. Welcome back to The Breakfast Grill.
Good morning. Thank you so much, Sazana, for inviting me again.
So the successful exit of Pharmaniaga from PN17 status in March must be a huge relief for you, since you were brought on as Executive Director and then Managing Director specifically to turn the company around, which you did in just 2 years. How did you manage to achieve what usually takes other companies twice as long to do?
Oh, thank you so much. I think more importantly is the teamwork. So the first thing that we need to do was to get the team to actually come up with a new rejuvenation plan as to how then we align what is misaligned previously. So what we've decided is actually we cut off whatever that is not our core business and we remain only in two core businesses. One is our manufacturing and the second one is our logistic. So what we've done is actually looking at how do we transform Pharmaniaga from a PN17 company to exit PN17 with certain timeline that was given to us. So our aim at that point in time was to try our best not to ask for any extension of time, because we believe if you realize that Pharmaniaga went into PN17, it was due to technical provisioning. It's pure technical PN17. We were not financially distressed company. So it's slightly different for Pharmaniaga.
Okay.
So our core business is there. So what we need to do is that we have to be more focused in our core businesses.
So you said that Pharmaniaga wasn't a financially distressed company, and looking at your most recent earnings pattern, you can boast of 8 consecutive profitable quarters since Q1 of 2024. But as recently as April 2025, your auditors, Ernst & Young, did flag material uncertainty that could affect the company's ability to continue as a going concern. Have these material uncertainties been fully resolved?
Oh yes, like I mentioned, because we were not financially distressed company, but it was a purely technical PN17 due to provisioning of the COVID-19 vaccine. So because of that, our shareholder equity went below 40 million, and as a result, then we trigger PN17 at the practice note 17. But when it comes to the MUGC, so what we've done is actually, if you read into our latest report, actually the auditor has actually cleared us of MUGC. So now we are back to normal.
Okay.
So we've exited PN17 and we are actually now in a lot more better position than before.
You said that you've been cleared of MUGC issues, but could there still be residual risks? Because you still have 816 million ringgit in borrowings. You have a pretty high gearing ratio of 1.9 times. Your interest cover is only 2.1 times. That's down from 3.7 times in 2024. So how would you...
Okay, first when we completed the regularization plan, we pared down the borrowings from 1 billion, we pared down now is about 800, ranging about 850 million. So eventually we'll pare down a bit more. Our target is by 2030, we hope that our gearing ratio will be about 0.9 times. And it is achievable. Why I'm saying that it is achievable? Simply because if you look at our projection, we have recorded so far about 8 consecutive profit. Despite, we went into PN17 on 27 February 2023. But in 2024 itself, we already recorded profit. Based on the current business, if you look into our concession, so our concession alone, we are doing about almost for 2025 more than 2.1 billion for Malaysia. And because we move into optimization, and also we have started this strategy initiative to monitor our inventory, our stock holdings, and our transport management. So these have actually helped a lot in us reducing our costs.
So there's a lot of moving parts here in terms of how you're going to reach that 0.8, 0.9 times gearing, right? I want to talk a little bit about your regularization plan, particularly the private placement exercise that raised about 224 million ringgit. And it did see Jackal Medical come in as the second largest shareholder. Now, in an earlier interview with The Edge in 2024, you had said that you were looking for a strategic investor. So how does Jackal Medical fit the bill, considering their parent company is better known as a textile retailer, and they were just set up in May 2025?
I think maybe a lot of people didn't realize that Jackal Medical, this is not their first investment in pharmaceutical. I think they started way during COVID-19, where they were supplying masks and also glove. Then subsequently they venture into blood tolling. So they actually been awarded the tolling contract from KKM. And other than tolling project, they were also doing hologram. So it is not something new to Jackal. So when they came in, we believe that with their financial strength and with their experiences in medical, we can work as a team because we are very strong in logistics and distribution for pharmaceutical. So whatever business that they venture into in terms of a government, we become the logistic provider.
I see. So do you see synergies between the two of you that you can leverage on moving forward? Let's take a look at your most recent financial earnings, because you capped FY 2025 just shy of your annual top-line target. Revenue came in at 3.9 billion ringgit. We'll round it up and make it 4 billion. We'll give you the win, right? I do want to note, though, that the logistics and distribution segment, that is the biggest contributor. It made up 2.8 billion ringgit on the back of an 8.6% growth in volume. What's notable, though, is that the pre-tax profit actually fell 95% from 2024, and it has a barely there margin of 0.3%. Now, we know that this segment has very thin margins, but why are they so compressed?
As far as logistics and distribution is concerned, because it's a combination of Malaysia and Indonesia, now logistics. So Malaysia, for Indonesia, it contributes almost about 30% of our revenue. So, and Indonesia, our main business is actually logistics and distribution. For Indonesia, we're doing about, in actual fact, year on year, there was a growth, but due to the Ringgit Malaysia strengthened against IDR. So it was a massive impact in terms of when it comes to reporting, because we need to consolidate it. That's where the impact is.
So the drag is because of the Indonesia
so
business.
The Indonesia, and there was one situation where we were asked to do air freight of our stocks to Sabah and Sarawak due to urgency. So that have one-time impact on us. So other than that, actually, in terms of the even for Malaysia, the SKU, because our fee is based with government is based on SKU, so we have actually hit way above the budgeted SKU. So we hit more than 90 million SKU in a year. So that was never before. So that's why I think, in actual fact, the logistics and distribution is doing quite well. Say, as far as our fee is concerned for Malaysia, the logistics and distribution is fixed. It's per SKU. We cannot do anything about it. The only way for me to reduce is the cost. So how then do I reduce costs for logistics and distribution? Then I move into automation and digitalization. So we started this initiative where we start to implement stock inventory. We manage our inventory better. Just imagine, because of the reduction in stock holding, because we're efficient, we save just on interest charges about 7.6 million a year. So we used to hold stock about almost 400 million. So now we reduced to about slightly less than 300 million. So by that reduction, actually we save 7.6 million.
Okay.
And then we move into OTM, basically it's Oracle Transport Management. How then we do plotting? So we increase the route. So by increasing the route, you save a lot more money, because it's the same trip, one lorry, but they drop in more places.
Okay, so you're talking about all these cost savings that are being made in these programs that you're integrating into your business. One thing we haven't spoken about yet is the cost of fuel, which is something that came as a bit of a surprise to the world. How much of that is going to weigh down on your costs?
Okay, for Malaysia at the moment, because we are subsidized for our logistics and distribution, and
even your business is subsidized.
Yes, because we are under because we're supplying to government.
Okay.
So basically, because of the subsidy, so we are able to manage. We don't see the impact at the moment. Same thing in Indonesia. We are in logistics distribution business. There's also a subsidy by the government, but I believe in Indonesia, what we've been made to understand, they can last until end of the year. But we then realized that we cannot be relying too much on subsidy. So what we've done is actually we have committed ourselves for this year, 2026. We have purchased 4 new warehouses in strategic area. We have one in Terengganu, one in Sabah, one in Sarawak, and one in Penang, so that it can become the DC, distribution center. You centralize the distribution. So currently we have about 15 warehouses. So by end of this year, we will have about 19 warehouses for Malaysia.
And that will cut travel costs or distribution costs.
And then we also embed AI so that we can look at demand forecasting, so you can manage that. Same thing happened in Indonesia. We have completed our new central warehouse in Bekasi, which is quite huge. So that central warehouse is where we're going to house everything, and from there, then we target it. We send to all those respective branches.
So that's related to the L&D costs. What about in terms of medicine supply? How are you seeing what's happening in the world with the war in Iran? Is that going to affect the supply of drugs to the country?
Okay, I think it's very interesting because at the moment, because of the geopolitical issue, the war especially, the price of medicine, so far we don't see a huge incremental, but we know for a fact that it will increase because of the component, because there's called RMPM. Your raw material, your packaging material has an impact on the product itself, despite the fact that for Malaysia, as far as Pharmaniaga is concerned, our main supplier is actually from China and India, but it's a global impact on oil, on logistic, on freight. So we believe that based on our assessment, there'll be an increment about almost 12 to 15% in terms of costs as at to date. But over a period of time, it is not impossible for it to increase to up to 30%. So that is the actual impact on the cost of medicine, which we translated into the medicine price. But so far, we are still trying to manage it. We built our stock. We still have enough supply, and at the same time, we're still trying to manage the price.
I'm speaking to Datuk Zulkifli Jaafar, Managing Director of Pharmaniaga. When we come back, what are the priority growth areas he'll be focusing on under the Vision 130 plan? Stay tuned, BFM 89.9.
You're listening to the BFM Breakfast Grill with U-Mobile's Ultra 5G, the next-gen network for Malaysia. Not all 5G is built the same. Some simply connect. Others move industries forward. Ultra 5G from U-Mobile is the next generation network for Malaysia. With ultra-fast speeds, stronger seamless coverage, and enterprise-ready performance with built-in next-gen security. Experience the difference of Ultra 5G today. Only with U-Mobile, the next-gen network for Malaysia.
The biggest flex is owning a new Mercedes-Benz on your terms with Agility Plus. Flex your finances with flexible repayments. Flex your rewards with exclusive offers and service packages. Flex your confidence with an extended warranty and guaranteed future value. Flex it your way with a new Mercedes-Benz from 2,288 ringgit per month with Agility Plus. Terms and conditions apply.
You're listening to the BFM Breakfast Breakfast Grill with U-Mobile's Ultra 5G, the next-gen network for Malaysia.
If you've just joined us, you are listening to The Breakfast Grill. I'm Shazana Mokhtar, and with me on the show today is Datuk Zulkifli Jaafar, Managing Director of Pharmaniaga. I want to focus on what you're looking at for the future, because you launched the Vision 130 blueprint with the ultimate goal of becoming the most valuable pharmaceutical company in Malaysia. You're looking at a market cap of about 3 to 4.5 billion ringgit. You want to achieve PAT of 300 million ringgit. 2025 PAT stood at 50.7 million ringgit. Yes. So tell me how you plan to bridge that really massive gap.
Okay. Yes, it is a huge gap. But in our plan, what we have started actually, one of the core pillar is trailblazing our biopharmaceutical. The segment under biopharmaceutical is actually, we have insulin, we have vaccines, and also we have biologics product, so which include blood products. So this is huge. Why we are venturing into this? First, like I say, is barrier entry. So in Malaysia, we are the only local biopharmaceutical plant, and we are also the only one that is halal certified plant, okay, in Malaysia. And what we have done is actually we are very focused in the sense as far as vaccine is concerned. So in Malaysia, 100% under KKM, 100% of vaccine is imported in. So government spend almost about 250 million ringgit yearly just to import vaccine. So, and because in Malaysia you have this National Immunization Plan, NIP, it's called NIP, where children is given vaccine from young. So, and out of that, there's about 11 NIP product. So out of that 11, so what we have done actually, we have 7 of that 11
that are being commercialized right now, that you produce and you sell.
We have started negotiating. We are localizing it. Some we are doing trading before we move into localization. So this is a big market, and what we've done is that we choose the one with higher value. Why? Because the idea behind this vaccine development is to make sure that first, there's a security of medicine in Malaysia, and second, it's affordable. Because what we can do when we localize it, it becomes more affordable for the country. So when we venture into it, and we became the together with government, with especially with MOH, we are part of the national vaccine roadmap.
Right.
So we developed together with the country in ensuring protection to the society, plus we are making sure that it is affordable.
So I can definitely see the value proposition in this. It's very attractive and it has a lot of support, especially from the government. But at this stage, it's not tested yet, right? You're still working on the mechanics of producing and commercializing these vaccines, but that's what you hope will be part of your manufacturing capabilities between now and 2030.
Actually, we have started commercializing the human insulin. So we are moving into vaccine. We started doing the trading first. And then...
trading meaning getting it from somewhere else and distributing that?
Yes, but you need to go through the regulation. It takes a bit of time to get it regulated. But because we have we have a research development team. So we have almost 70 scientists in-house. Just to make sure that, we are in line with whatever that government wish, and whatever product that we intend to commercialize is actually, it is properly done. So we have started it. For insulin, we are more advanced, and for vaccine, we are at the tail end for one of the vaccines.
When will we start to see that being commercialized?
We are hoping by 2027 we start commercializing the first vaccine for the country. But for insulin, we have started. Before this, for Pharmaniaga, 40% of the government requirement is actually supplied by us through Nova Nordisk. So Nova Nordisk actually appointed us. It's just that when Nova Nordisk decided to pull out from Malaysia, so that's why we then came in to localize it and supply it to government as well.
But as a manufacturer, this is going to be the first big test, right?
Yes, it is.
Okay.
We're very confident because our capability for the country, actually for our plant, our manufacturing plant for biopharma, we are capable of producing about almost, in terms of cartridges, about 25 million cartridges a year. And then for vaccine, we can do about 30 million PFS a year.
There are other biopharmaceuticals that you're also looking to go into. And to be fair, it's still but a fraction of your revenues right now. I think it's still not reflected on the financial sheet. So give me like your expansion plan and timelines for biopharma to actually make a meaningful contribution to your financial earnings.
I'm targeting for my biopharmaceutical plant alone. For this year, I think it's gonna be about. Hopefully, I can hit almost 60 million. For next year, for 2027, biopharma, I can hit almost about 200 over million. But by 2029, I should be hitting about 600 million just
in revenue.
In revenue, just on my biopharma.
I see.
So it's in our.
It's exponential growth.
Yes, it is. That's why looking at the way I look at it, I am very confident by 2029 on our manufacturing arm alone, because currently we're doing about 350 to 400 million. But our manufacturing arm alone in 2029, I will hit 1 billion.
Where is your market for that, though? Are you relying solely on government contracts to reach this target revenue?
Yes. As far as biopharmaceutical is concerned, majority of it is actually government contract, because what we've done is actually, we've done an assessment. You see, like I said earlier on, as far as vaccine is concerned, government spend about almost 250 million a year. So the moment you localize it, so government will give you a priority under the system to take up from us.
I see.
So what we've done is that then we identify which vaccine are more critical, and in terms of value is higher value. So we are working on those vaccines.
So de facto, you would be the first option for MOH.
Hopefully. Hopefully. Because I think the way we work on it is that because that is the government policy, if you localize, then priority should be given to the company that localize the product. Because that is the only way for you to make sure that there's a security of medicine in the country. Because you cannot be dependent so much on, other country. Because that's what happened to us in COVID-19 when we were hit. Because we were so dependent that's why despite the fact that we pay earlier, but you receive it later. Because it's very competitive at that point in time.
Okay, you are currently proposing a 5-to-1 rights share exercise that could see your share price rise from 25 cent to 1 ringgit and 23 cent.
Yes.
Is this just a cosmetic change to boost your share price, or is there a substantive reason to restructure capital in this way?
No, it's actually it's more because if you look at it at the moment, our share is about 6 over billion. So I think it's too large. So what we decided that maybe the best way moving forward is actually to consolidate it. So at least with every 5-to-1, so you can see that is the actual position of Pharmaniaga. So you can drive better value. Otherwise, your share is too large.
Okay.
It's too big, 6 over billion in terms of shares.
Okay. I know that this is going to be voted on at an EGM sometime soon. Are you confident it's going to succeed? Has it been received well from most shareholders?
I think most shareholders have given, because our majority shareholders have given us the green light. Whatever it is, there is no impact on them. As far as the shares are concerned, it remains the same. And the value, we are hoping that the value will go up once you consolidate it. So other than that, there's not really a financial impact.
So thank you so much for taking the time to speak with me, and I look forward to catching up on where Pharmaniaga heads next.
Thank you so much, Shazana.
I've been speaking to Datuk Zulkifli Jaafar, Managing Director of Pharmaniaga. This has been The Breakfast Grill on BFM 89.9.